Love that song, ladies and gentlemen. Love that song. I don't know why. It just kind of grows on you, doesn't it? You ever find that, you're walking through everyday life and, walking through the mall or something or wherever you are, and that song just resonates through your mind. You can't get rid of it. What do they call it? An earworm or something? It stays with me all day. I hear this every morning in our trading room. It just stays with me every morning, every day, all day long, loud and clear, loud and clear. I find myself singing it in the bathroom, in the shower, and everywhere. Good evening, ladies and gentlemen. Welcome. I see a lot of people still joining us here. Come on in, gang. Lots from right here up in the front. All right, and let's get started. It is 8:01 Eastern time. Not to keep you here all night. Let's just get this show started here. So let me just find that button that I gotta push. Here we go.
Recording in.
All right. Good evening, ladies and gentlemen. Welcome to DayTradeSPY.com's Week Ahead, and we are here right now. Yes, we are starting shortly. We're starting right now. Okay. So my name is Hugh, and normally we have Aaron with us, but I gave him the night off tonight. I gave him the night off. Let him spend the time with his family, and it is Sunday, November the 12th, 2023. So so we're going to give him the night off, and he'll be in tomorrow morning doing the trading room. So give him a little bit of a break on that one. Anyway, not a problem. We've done this many times in the past. I'm just curious to see how many. Let's see, we've been doing this for 14 years. 52 times Sunday night show. Well, yeah, over 700 times. Anyway, I think we're going to get good at it maybe eventually. So by attending this webinar, folks, you understand, accept the financial risks involved in trading securities. I'm just going to let you read this through here. I think you'll understand that with this disclaimer, keeps the lawyers happy. And all you have to do is know that you are responsible for all your own trading, and past performance does not guarantee future results. I think that's kind of important. So charge TD, courtesy of TD Ameritrade. I think there's someone else, so Tasty Works, if we go down that path. All right, so there I am, live in a living color here. Again, look at this in front of the camera here. Just want to tell you folks, we have a questions box on your Zoom dashboard. This is an interactive evening. All right, so please feel free to put any questions or comments in. You'll find that little icon on your Zoom dashboard. I am the only one that sees that. And if Aaron does decide to join in here, if he gets back in time from some family function, then he'll be also seeing the questions. But so don't worry, there's no such thing as a dumb question. Sometimes people get really shy. This is actually really pretty funny when people, they don't want to ask a question in these sessions, but then later on they email me, and it's actually pretty good. So okay, 2 questions up on the board. What is your win percentage for the OMG trade? I don't know. I didn't track it. I would say 96%. Just off the top of my head. It's very high, very high. Maybe it's 98. We when we report our results, you will find that we take the high buy price. Let me just get a drink of water here. Hang on a second. My throat's a little dry here today. So we'll take the high price, the most conservative price out there. In all likelihood, you would get it a lot cheaper than what we do, which makes your success rate in the OMG pick of the day, trading, all that stuff, higher than ours. So we try to be, we're more than fair. We go way over the edge on that. So yes, we manipulate the numbers against us. Okay, we put it in your favor, and we make sure that we report the highest buy price. You'll likely get it for less. Next question: did you get a haircut, Hugh? No, Frank. I actually lowered my ears. Yes, I did. My hair was getting a little too long and unruly, and I started to look like a bum, And I didn't want to be mistaken for somebody homeless or something. So I want to be more presentable to you guys. All right, Ed S, first timer, anxious to learn what you guys are teaching. Okay, so that brings up a good point. Thank you very much for that, Ed, and welcome to everybody. So if you are unfamiliar with options, okay, then please stay on, because after this sort of regular session, I'll do a little segment on sort of a primer on options. It's not a comprehensive training on options at all, but it's a kind of a primer. It gets you familiar with what options are, and you'll understand why we trade options and why we trade options on SPY. So we're going to do that immediately following our regular session. So just stay on board, because I'm of the opinion that most people here are familiar with options trading. So I don't want to kind of, bore them all with that. So excuse me here. And another question here. Okay. Okay. Oh, Mike W. Good evening, gents. Hope the weekend was good. I got an email about a new strategy release by a conference call on Wednesday mid-afternoon. You got that, huh? I didn't think that was going out quite yet. I guess it did. Many of us, me included, have still do real jobs, and I travel. So while I signed up, I'd be very interested in hearing about the new strategy. I will miss it. Will it be recorded? I believe it is going to be recorded, although I'm not sure of that. And can they do it after then and at the end of the workday, so we can have an opportunity to learn about it and see if it fits our trading strategy? Okay, actually, okay, so it's kind of an announcement here I'm going to make. We haven't made this announcement yet, but some of you, hopefully all of you, will have received a phone call from me. Yes, I call 500,000 people individually. That's no, it's actually next Wednesday, the 15th of November at 3:00. We actually have a teleforum. That's what they call those things. Phone call, and there'll be a lot of people on the phone call. It'll be an interview with Roger Michalski from Eagle Financial Publications, introducing a new strategy that we are going to be releasing. And I also believe that the next week's e-newsletter, which I believe goes out on Thursdays, will also have some information on that. It's going to be actually very, very, very exciting. It's going to be exciting for the active trader. You're going to really want this. So, all right. So let me see. So yeah, if you can join in on that teleconference. Not sure about the recording. That's a good question. I am going to write it down. Okay, teleconference, and I'll find out. Will be recorded. Okay, I'm going to ask Roger that. Okay. All right, we'll get to some more questions later on here, and let's get started on what we're talking about here, folks. I am your host here tonight. Okay, I am your host here, and my name is Hugh Grossman, and I learned most of what I know from the trenches. All right, mired deep in the mud. Okay, just a very brief background on myself. I came from a Fortune 500 company, and as a good salaried employee, I handed off a lot of my money to my financial advisor to invest for my future, and it did not turn out quite the way I thought it was going to. Quite some time later, I realized that he had blown up half my account. It wasn't going anywhere, so I seized control, learned how to do this myself, and couldn't be happier. In fact, after I learned how to do this, I sent the president of that company a letter thanking him for messing up my account, because had he not done that, I would not have taken the initiative to learn how to trade options myself and invest for my own future, and I never would have been as successful as I am now. So for that, I thanked him, and I thought he might send me a reply, but maybe it got lost in the mail. I never heard back. So, but anyway, we've been teaching. So what happened was I learned how to trade myself. I started making some serious money on the market, and then people started taking notice. Obviously, I quit my job, new house, new cars. What was well, let's put it this way: my kids' education was in peril for quite some time there, until I learned how to trade. I had come to the conclusion that, well, okay, I don't like what's going on here, but if I have to pour coffee when I'm 80, 90 years old to survive, I guess that's what I'm going to have to do. But I'll be damned if my kids are going to suffer with their education. So I'm going to learn how to do this and seize control of my own accounts and get their education back on track. Well, I was very, very happy that, yes, all their education was paid for through the money that I made. trading options and whatnot. So anyway, long story short, when I started, my fortune started to turn around. People took notice and they coerced me into teaching them. And that's where this whole thing came from. That was 2010. So we're in our 14th year doing this, and I'm looking for short-term breakout trades, make a little bit of money every day, gets those singles and doubles that wins the race. Okay, we all get a home run once in a while, but it's those singles and doubles that actually wins the race. And very excited and happy to be training a lot of people, and we've trained thousands of people over the last 13, 14 years, and we're very happy to train you as well. My associate Aaron. So what happened was we've been doing very well with this, and then Eagle Financial Publications bought us out last year, 2022, and in doing so, they brought Aaron Stevens on board as well. Aaron's a great guy, 40 years old, married. He's got several kids, and he's but as a teenager, he had started looking at the markets and charting and technical indicators and all that stuff. I think he opened up his first trading account at 18 years of age, when all his other friends and kids were doing other things. He was in the library looking at stock charts. Who does that? I'll tell you, a nerd does that. He's a self-proclaimed nerd, but he's a great guy. I think he's grown out of it. He's actually very funny, very likable. You'll love this guy. He's also very intelligent. All right, he knows a lot of things about the market and a lot of things in general. And we actually scooped him from he used to be a technical analyst for a fund, $150 million fund, commodity fund that was doing very well. But he identifies these longer term, high probability trades. So he does very well on that. So, but anyway, he's in our trading room every morning, 9:20 to 10:30 Eastern. All right, so what we're going to do here, we're going to discuss here today. We are going to discuss here today the 2 to 10K challenge hitting into Thanksgiving. So we're going to have I'm going to talk a little bit about the weekend review and what's coming up next week, and then we're going to have a sort of a Thanksgiving chat. Okay, we got Thanksgiving coming up in what, 2 weeks? I believe it's in 2 weeks, right? What is today here? It's actually going to be on the 23rd, in a couple of weeks. So we're going to talk about the 2 to 10K challenge, trading room challenge. This is a challenge that we started. Actually, we did this back in the spring, April to July. We took $2,000, turned it into $10,000 in 3 months, and it became very popular to the point where people started asking for it again. So we started this in September the 25th. With the objective of turning $2,000 into $10,000 by December the 25th, which would make an excellent Christmas present for people, to whatever, or holiday present, whatever you want to call it. Anyway, we're well ahead of the game, so we're going to give you an update on that. We're also going to talk about in this sort of a chat any challenges you may have. Okay, so put them in your questions box. We're also going to talk about why TradeSPY and why you need us. You may not even know that you need us. Hopefully, you'll discover that. Wait a second. These guys are pretty good. Maybe we should hitch our wagon to these guys. Maybe they'll make us rich. That's what we do, right? That's what we do. We teach you a lot of cool things, and we're going to answer your questions. And at this point in time, I want to give you a little heads up here. We're going to have a little contest, and what I'll do is I will take the first 3 people. No, let's make it 5 people. 5 people. All right, so you see this turkey here on your screen. All right, so the first 5 people who will identify when they see the turkey again, all right, on what screen, what PowerPoint slide they're going to see it on. When you see this turkey, let me know in the questions box. First 5 people that identify that they see this turkey, they will get a free ebook entitled Triumphs and Tragedies, which is a compilation of not all, but just some, and actually quite a few, real life, true to form accounts of and clients that have come through here. Some of whom done very well, and others who just not done well at all. But I think you'll find it's interesting, just some of these stories as to what it's all about. Triumphs and Tragedies, true stories about about some of the people that have come through our door here over the last few years. And the first 5 people, again, who identified that they see this turkey in the future here on this PowerPoint, will get the first, they'll get the copy of that ebook. All right, so here's the week in review. Here's what happened. All right, this is taking a look at the options or the stock market. We trade SPY, SPY. This is the stock that follows the S&P 500, which is really cool because this way, if you're looking at trading options, you don't have to look at all these other companies or exchange traded funds or anything else. All you have to do is look and see where is the economy going. Where the economy goes, SPY follows. Very simple. I used to belong to other trading groups long time ago, and I remember, let me see, Sunday night right now, 8:15. Yeah, we'd be on a call. In fact, we'd be on the call till probably about 11:30, 12 o'clock, discussing the various companies and sectors and all these crazy things as to where we see the market going later on during the week. Well, the funny thing about all that is nobody really knows anything. We'd also be in the trading room every day, 9 to 4. We'd be on every, I don't know, Tuesday night, Thursday night, Friday night, Saturday. We were on, it seems like we were online all the time. Well, there goes your life. And I realized that's not really what I want to do. And then when I discovered trading SPY, all I had to do is just figure out where is the economy going, and SPY will act accordingly. Okay. So on Monday, last Monday, we had a low news, no news day. The effect of major resistance as SPY came up to that 436 level, that was really kept in check. So the technical indicators pushed it right back down again. Then it found some support somewhere around just under 434. The bulls got a hold of it and pushed it back up. It closed slightly over the open. So just because at the morning open trade, you see the stock coming down, doesn't mean that's where it's going to end up. I talked to a lot of people about, oh my gosh, the market's dropping, you better sell for loss. Well, I don't take losses too easily. So most often, if you see me like that in that position, I'll just tell them, say, just hold on. Just a bad storm coming through. It'll pass. And sure enough, it did. And that's what happened. So Monday was a relatively nothing day on the stock market. Yeah, we still made money. All right, we still made money. On Tuesday, once that 436 was breached, in other words, the things just shot up. All right, SPY quickly took to 437 as the next technical level for actually resistance, should be resistance. Well, actually shouldn't say that. No, it is actually support. It broke 437, but 437 also became support as it came down. You'll see these big this big red tail on this one candle. The bulls kept it over that 437. All right, filled in the valley from mid-October. So if we were to go back in time, you'll find that since mid-October, the stock had really dropped a lot, bounced around and came back up while we filled that downstroke here from mid-October. So we're back to where we were last October the 16th, I believe it was. Coming into that Tuesday, we're also concerned about Wednesday's Fed Chair Powell's opening remarks at a conference in Washington, D.C. And the market was pushing up very nicely in anticipation of continued, continued low interest rates, or at least I should say no more raising of interest rates. Not that it's low, but I know that a couple of weeks ago they were talking about holding interest rates steady here to the end of the year. It depends, of course, on what the economy is doing. But the comments from Fed Chair Powell said that, well, listen, we're not out of the bush yet. We're just obviously I'm paraphrasing here, and there's still more work to do. We want to get interest rates down to 2%. We're not there yet, and we know we got to be careful about the head fakes, and so that pushed SPY down actually about 3 points. Then it went back up and closed near its open. And then Wednesday, Fed Chair Powell also commented in another meeting. It's actually I believe it was an online meeting that he was in. But anyways, he's still talking about getting inflation down to 2%. So he reiterated what he said the day before here. He said that SPY still has, not SPY, but the market, the economy still has a long way to go. Watch for increased rates still to come. Possibly December, possibly early next year. They are not going to look at reducing interest rates until possibly late 2024. Well, not the news the market wanted to hear. SPY tanked. SPY tanked, but look what happened. By Friday, all 11 sectors got positive. We had a chart pattern here, double bottom. What I'm not showing you here is we had some upward divergence on the MACD. After a big drop like this, it's not uncommon that buyers see an opportunity and jump right into this. When it was under that 434, right away they jumped in pre-market and ran this thing right back up again. In fact, SPY got so much momentum behind it with this rally. We ran up from about 435 to 441. It's about a $6 increase right here as it just shot straight up. In fact, all 11 sectors were positive, lifting the three major averages, the Dow, NASDAQ, and the S&P 500 for the second week in a row, topping out over 441. And here's the cool thing. Aaron predicted this in the trading room. Aaron predicted this. So congratulations to those who actually took up Aaron on this, even if it was for a small amount. But he did predict this, and it was pretty awesome. Pretty awesome. All right, so here's what happened. Week in review. S&P gained just under 6%, bringing the year to date to just under 16%. NASDAQ's up almost 32%. The Dow 3.4%. All right, so here's what happened. U.S. markets remained remarkably resilient, mostly driven by personal consumption. Personal consumption. Okay, we do not want to give up our money. We want to keep buying. Personal savings as a percentage of disposable income declined. So a lot of the savings that were accumulated through the COVID years, all that government money that was given us, they are now, consumers are continuing to spend, reducing their savings. This moved into the credit card balance world, and balances have risen to over $1 trillion as of the third quarter. This is the highest on record. And along with this, both credit card and auto loan delinquencies are also ticking up. Do you see a problem forming here, folks? Bank lending standards remain tight for consumers and businesses, making it harder to secure loans. And so we're going to be seeing a bit of a pullback there. And the consumer now is facing headwinds, maybe poised to slow, but inflation and the Fed rate hikes may still be contained. All right, they're still looking at that. Let's take a look here at seasonality of it. For those who don't understand this chart, that blue line there is where SPY is now. The red line is a composite of the last 5 years closing balance on the daily charts. To expand this and sort of zoom in a little bit here, let's take a look. Historically, SPY rose about 6 points last week. And looking into the week ahead, it looks like we may roll. Well, we did rise 3 points the following week, again, over the last 5 years. Okay. This is the rise going into the end of the year, where funds start rebalancing. The investors, the institutions, the mutual funds, they have to get their balances, their percentages in the various sectors just right. So you'll see a lot of trading going on. Monday is another no news day. So you'll see mostly technical trading. Now on Tuesday, we have a consumer price index coming out, and on Wednesday, a producer price index, PPI, CPI, and PPI. Retail sales is also going to be out on Wednesday, and oil inventories. Thursday, we've got some more unemployment claims reports, industrial production, Philly Fed manufacturing index, and on Friday, building permits, housing starts. So there's going to be a lot of volatility coming in here on Tuesday, maybe even late Monday, as we head into the consumer price index world. PPI follows right along there as well. Retail sales is also going to be pretty instrumental. So what does this do for us? Bottom line, volatility could be fairly light on Monday, but watch for increased volatility on Tuesday through Thursday. I expect markets to continue to the upside, but we may see some profit-taking moments along the way. So there may be some dip back to the downside. Longer term, I think we're still going to be pushing to the upside here as we make our way into mid-November, end of November, and actually in a couple of weeks, Thanksgiving, and we'll give you the effects on what that's going to be all about probably next Sunday night. All right, so moving along here, let's take a look here. Folks, there are many opportunities every day to make some money in the market, and we're going to show you how to spot them, how to trade them. That's what we do. And that's what we do, all right? That's what we do in the trading room. That's what we do in the inner circle. That's what we do when we do one-on-one training. Right now, I want to talk about the 2 to 10K challenge. Here's an update. So again, we started this mid-September, actually September the 25th, and we've got ourselves, what's this, about 35 trades under our belt right now. Only 2 minor losers. A couple of weeks ago, we took a hit for $180. And this last week, I think it was on a Monday, November the 6th, which was last Monday. The market did not go quite where I wanted, came down, then it went back up. And then just as it was tipping over again, I said, you know what? I don't like this trade anymore. I'm pretty confident it's going to be okay, but I didn't want to tie up my capital. I just wanted to get out of this trade, and then when it broke a little bit of support, I said, I'm just going to take the hits. I lost $224 that Monday. But I wasn't worried because I'm pretty confident that I can make it up. On Tuesday, brought in 289, 117 on Wednesday, 390 on Thursday, another 336 on Friday. And this here's where we sit right now. So this column here says end, that's actually our budgeted ending price. So right now at the end of Friday, we were supposed to have been at 47.46, but the real balance is 58.58. So we're $1,112 over our budget, and which is pretty cool. And these last couple of days, they're just 2-minute trades. They're just 2-minute trades. So we try not to stay in trades for very long. We just try and get in. So we identify where the market is just about to push through. And just as it does, breaks a certain key resistance point in this case, I jump in. 2 minutes later, I sold, got the profit. And this actually put us ahead of the game, I believe, 8 or 9 days. If we do not trade until November the 22nd, we're still going to be on par with where we expect to be on this trade. That's kind of cool. That's pretty cool, actually. A lot of people are doing this trading room, and people are making some pretty decent money on this one. I had a question here. Can we get into the trading room at any time, or do we have to start when you start? Okay, so you can actually get into this at any time. There's no rule that says, you can't jump into this. So if you want to join the trading room and just jump into it, so okay, maybe you're not going to make, 2 to 10,000, but you might take 2 to 5,000 or 8,000, or maybe you'll take it to 12 or 14 or 15. I mean, there are a lot of people doing a lot better than we are. We're just being very conservative in this whole thing. You're just going for those minimal gains. Some people are taking this thing right up. I had people email me on Friday saying they made out like bandits on Friday. They've all put it up in the challenge. I think there's one guy, he's up several $1,000s. He says that this is great. He's going to hit his 10,000 mark long before December the 25th. Anyway, here's a graph of this. That blue line there, a gray line, that's the actual where we are right now, and that brownish line, that's the budget where we're supposed to be. So you can see that we're breaking away from that. We're going much further up in this challenge, and hopefully we'll make our 10,000 sooner rather than later. And I got a question on the board. When are you going to start this again? I don't know. Possibly January, I'm guessing, maybe January. Again, I don't know. We're doing them one at a time, okay? And right now we are just in the middle of doing these. So that's what it's all about. All right, so here's our pumpkin patch chat. Here is our pumpkin. So I'm going to go to the questions and answers and hopefully get to your questions, and also bring in whatever questions that you might have. All right. Let me go back. Lots of questions up on the board. I love you guys and gals. So nice to see you. All right. There you go. Okay. Every time I click on or click off of this this PowerPoint, what happens is my video freezes up. So all right, okay, so here's a quick cone. I hope I pronounce this right. I usually sell options. When you buy options, how do you margin requirement change? I'm not really sure what the question is. How do you margin requirements change? How do margining requirements change? Well, okay, so I advocate cash accounts. In other words, you can only trade what you have in your account. I do not like to trade on margin. It's just too dangerous. I have traded on margin in the past, and it's very stressful when you're in a losing spot, because not only are you down, but as you're trading on margin, your broker lends you the money and you are indebted to your broker. Okay. If you have a loss, and there are a lot of losses with options, most options traders lose money. It's actually very easy to lose money. So you have to be very, very careful about these things. I don't like to use margin because I just want to be able to trade what I have in my trading account. I think it's very important. And if I don't have any money in my trading account, I can't trade, right? And that's not kind of the way it works. If you're selling premium, not sure, we don't sell premium. Okay, so our system is very basic, very simple. And we make a lot of money doing it this way. We buy and sell in that order. We buy first and then we sell. We buy calls and puts, and then we sell those calls and puts that we have purchased. We do not trade spreads. We don't trade naked positions, nothing like that. We don't want to get into margining. We just want to straight out cash account, buy and sell. Okay. So I would get right off the margin on that. And now if you do buy on margin, let's say you're to buy $5,000. Well, if your broker margin's 2,500, they'll take 2,500 from your. Sorry, if they broker 50%, they'll take 2,500 from your account and lend you 2,500, okay, to buy your options. Even if you have the money in your account, what they do is they will still margin you that account. So you think that, oh, something happened and they only took 2,500. Well, that's because they lent you the other 2,500, of which you're going to be paying interest on. Okay, that's really where brokers make a lot of their money. The commission is almost secondary. Okay, so another question here from Len: when trading the SPY, are you trading the ETF or the futures contract? No, not futures contract. We're trading the ETF, so we're trading options on the exchange traded fund. So SPY has options. We are trading the options on that, but we're watching the SPY stock ETF to determine where it's going to go. So you always watch the underlying stock, right? And where the stock goes, that's where the options follow. How can we minimize losses? Oh my God, that's a loaded question. Minimize losses. The way we trade, we get into high probability trades. Okay. We're not interested in trading something that's wishy-washy or something that's on the fence, or just because we can doesn't mean we should trade. How do you minimize losses? We do not use stop losses. If you want to lose your money, use stops. We actually have a pretty good cash management program with that. That's in our trading room. And, we talk a lot about that. So what I like to do is, if the stock drops, say 40, 50, 60%, I want to take a look and see, why did it drop? If it's a news driven item and I have plenty of time, I will probably just hold on to it, because organically that option is probably going to come back to life on its own. The market has a very short-term memory for news and a very good long-term memory for support and resistance. So these are ways that we minimize our losses. So if I look at it and it's not doing well, I may just organically weight it up, because markets don't move in straight lines. They bounce up and down. And for that reason, it just as well could come back up as it could go down. It's only going to go down to a certain point. Okay. SPY is never going to go to zero. It's going to go to a certain point, and the buyers are going to get attracted to it, and they're going to pull it back up. Look what happened Thursday. The market dropped and dropped and dropped. But at some point, it picked up support, because that's where the buyers said, not so fast. I like where it's going, and I'm going to buy it right here, because this baby's going to go back up. And then Friday just shot to the moon. Those people that bought late Thursday, they made out like crazy to get back up onto the positive side on Friday. So, all right. Okay. So I'm not going to get into individual trades what you had done, for example, in the trading room. That's those comments. If anybody's coming in who was in the trading room and you're presenting your situation there, we're going to leave that in the trading room because chances are other people are going to want to know that kind of information. And that's really more we're supposed to be. We're kind of going more generic, more general questions on the session here. Otherwise, we'll be here all night, and some of those answers will only be very pertinent to just one person. We want to make them so everybody benefits from these individual questions. Okay, by the way, I'm going to give the question here. What is the trading room record of win-loss in the trading room in dollars? Our win-loss ratio is excellent in the trading room. And I don't have the numbers there, well over 90%. I do actually in the inner circle, if you're an inner circle member, every day in the afternoon, late afternoon, early evening, we do issue a follow-up report as to what we did during the day. And that includes all those trades that we had done in the trading room and mostly in the trading room. So you'll see those records there. I don't have that. I don't think I have that in front of me. I'm going to see if I can find it here. Hang on a second. Maybe I can find Friday's trading room follow-up report. I've got so many so many emails that have to go through here and find out where they are. Oh, I don't want to kind of waste your time on this here. Trading room, where is it? Hang on a second. If I can find a follow-up report on Friday, that I can tell you what our results are. Okay, so this is what it looks like. This here is what a follow-up report would look like on Friday. Okay, I just lost it. Where did it go? Oh my goodness, hang on. I'm going to try and find it back on here. Okay, just can bear with me. I'm going to try and get it over here. And all right, so here's what we did Friday. He said SPY snapped a winning streak after yesterday's mini freakout when Fed Reserve Chair Powell warned that victory over inflation was not assured. Not only did the stock recover Thursday's meltdown, but pushed through 441 late day trading, head up to the R2 pivot. Our trades are as follows. Our pick of the day, we got a 6% here from 9:31 to 9:33. In 2 minutes, we got our pick of the day. The OMG, which is short for out of the morning gate. This is a trade. This is a little strategy we use based on the support and resistance breakout on the 5-minute chart. As soon as it breaks out on the 5-minute chart, first 5-minute candle to close, that's the direction we're going to go. Simply buy it if it's going in a direction. If it's going against us, just wait for the turnaround, then get in. But we got that for 345, sold at for 366 by 11:14. There's another 6% there. I just want to check that again. 345 times 106 is 365.7. So 366, that's right, 6% there. By the way, some of these options, you could have made a lot more if you just followed the stock up on those longer term EMAs, exponential moving averages. We just go for a standard 6% on both the pick of the day and the OMG strategy. Now, the 10K challenge, what I do there is I see, well, how much money do I have to work with? How many contracts can I buy? Well, this and on Fridays, I could buy 16 contracts. That's what I did. About 16 contracts of the 436 calls. I bought them for $3.18. That was at 9:39. In 2 minutes, I sold them for $3.40. All right, $3.18 to $3.40. And that netted me $336 net of commissions, which put us $1,112 ahead of schedule at 58.58 as we head towards the 10K mark. So once again, we had another success on all three of those trades, and that's what it is. So that's how our follow-up reports are. Okay, that's what they look like. All right, so that's what you're going to get. All right, so no, our trading room profits targets. Our win success is huge. If you are in a losing position at all on any of those, you are not expected to go to zero or anything like that. As a matter of fact, this is a really good place to exercise your patience. And usually we talk you through this. I'm not really sure why you would be in a loss. Perhaps you sold too early, maybe whatever reason. So I'm sorry about your loss, but the thing is to stay in the trading room, and we will probably, mentor you through to a win as we normally do. Yes, William, it is going to be a conference call on Wednesday at 3:00, the 15th. It is a phone call, not a video. So even if you are traveling and you got the call, see if you can get online. Okay. I think there'll be a reminder phone call going out as well, probably about an hour before or something. So try and get on that. I think it's going to be very exciting. 3:00 Eastern time on Wednesday, November the 15th. And if you don't get the invite, okay, you might want to just email customer service at DayTradeSPY.com. Do it before Wednesday because they're going to be very busy and stuff. So if you can get that in there before the end of Tuesday night, that you'd like to be on the list, and then they'll put you on the list for the conference call. Okay. And we'll be introducing a whole new service that's going to be very exciting for the active trader. Okay. All right. Howard, first timer, just subscribed to the pick of the day. Thank you very much. Sent an email this afternoon after reading the report you sent. I need help in preparing an online order on TD to make sure I'm following all your instructions regarding the automatic sell 6%. Please help. Okay, so after I buy the pick, okay, so here's the way the pick of the day works. Okay, so you subscribe, you're going to get the email in your inbox every morning, just after 9:00, somewhere between 9:20. Okay, you should have it. So let's say it's a call option. It's a very specific option. You'll find it on the top part on the sort of the banner, what the option is. The option code is right there. It starts with probably period SPY. Let's see if I can find one so I can show you what it looks like. Hang on a second. Pick of the day. Let's see if this is it here. All right. Okay. Yeah, here it is right here. So this is the way the pick of the day works. And this here is, this is it here. So right there in the top banner, right? And behind the black thing, that's the actual option. In this case here on Friday, we had the 436 puts that expire November the 17th of this year. And here's how to read the code. All right. It's pretty self-explanatory here. The symbol SPY, and then the expiration date starting with the year 23rd, 11th month, and then the day 17th, P for puts, C for calls, and then of course the strike price. This is how you would read the option. So the rules here are actually quite simple. Look to buy within the first 2 minutes of the opening bell, but wait a few seconds until the bid-ask spread settle in nice and tight, especially if there's a real gap in from yesterday's close to today's open. You'll often find that gap is quite high. So you want the gap to be closed in maybe around 2, 3, 4 cents between the bid and the ask. So you just have to wait a few seconds for that to happen. That means that the stock is finding its price. If you put in a market order, you could stand to lose because the market order is a negotiated price, and they could give you the price at a much higher value than what it's worth. So don't use market orders. Always use limit orders, so you know the most of what you're going to pay. You'll often get filled for a lesser amount. Now, if the stock is going against you, wait for the turnaround, then get it, and you'll get it for a little bit cheaper. Okay, and as soon as you buy it, immediately put it up for a sale. Good till canceled order with a 6% increase. How do you calculate the 6%? Very easy. You take your buy price, you multiply it by 1.06. That's the price you're going to sell it for. If you're looking for 5%, 1.05. If you're looking for 7%, multiply by 1.07. All right. And if the loss hits down about 65%, that's when I reassess the situation and determine if I should just keep the status quo, let it come back organically, whether I should average down and repair the trade or simply sell it for a loss. Selling for a loss for me is a last resort, not the first. And if you're of the kind that likes to use stop losses, you'll find you'll get stopped out a lot more than you probably want. And then you'll often find too, let me know if this happens to you, where, you're watching the option, it's down, you dump it, you're all mad and everything else. You still continue watching it like it's yours. And then 10 minutes later, it turns around, it would have delivered a nice little profit for you. So it burns you twice. Okay. So, but a lot of these options, okay, these picks, they might even hold off because options stocks don't move in straight lines. They zigzag up and down, right? They zigzag up and down. So you have to let the option breathe. It's like fine wine. You open the wine, you have to let it breathe before you drink it. Although minding myself of my misspent youth, that lonesome Charlie, what was it called? Boone's Farm Strawberry Hill, I think is what we used to buy and go in the bush and drink it like we thought we were somebody, but we never let that wine breathe. Let me tell you, couldn't down it fast. Going back to my years and my teenage years. See, when I was 18 years old, I was doing kind of goofy things like that, right? And Aaron, when he was 18, he was going on stock charts. So there you go. There's the difference between Aaron and me. But anyway, yeah, lots of fun in those misspent youth days. I was just telling somebody the other day, I have no right to be alive. Thank you, Lord, for keeping me alive, saving me from myself mostly. Oh, yeah. But anyway, just saying here, the stock has to breathe. The option has to breathe. So you're going to get these variances. It's going to go down. It's going to go up. And when it goes up, that's when you snag a little bit of a profit on it, right? That's what you do. It's like a dance. You're dancing with the stock market. Think of it this way. And, a dance is not going in one direction. You go forward a couple steps, backwards 3 or 4 steps, forward 2 or 3 steps, backwards. And that's the way the market works. So if it's going against you, just don't panic. Hold on. The worst thing you can do is sell for a loss. Why would you sell for a loss when it's in a loss? Unless you're going to expire in a couple hours and it doesn't look like it's going to come back up. Then I would say sell, take the hit. So anyway, that's how you do. I hope I answered the question there. Another one here, MCM, just signed up pick of the day. Thank you very much. You read your instructions on it, but could you explain again how to execute the pick of the day trade within the first 2 minutes? So look at the 1 minute chart. So you get the trade. So you have that trade. Let's go back to this pick of the day again, just to give you run through this. Okay, here we go. So let's say this came down into your inbox. Okay, this is what came into your inbox. Okay. And so the pick here of the day is the 436 puts for November the 17th. So you're going to watch the 1 minute chart. I don't have the stock market up or anything here. You watch the 1 minute chart, and I don't know if I have it, and I don't think I do. No, I don't have it. It'll take too long to bring it up. So the market opens, right? So 2 scenarios. You're seeing a little green coming in here on the 1 minute chart. You see the pressure going to the upside, right? This is the 436 puts. You see the pressure going to the upside. So just give it a few seconds because you want the bid-ask spread. So if the option is say $3 by 310 or 312, don't buy it yet because you're going to end up buying the high price. Wait until the bid-ask spread until it settles in. Say it might be 304, 306, then get it. Buy it for the ask price of 306. Sometimes if the market is moving up fast, I'll even go 307 or 308 because as it's moving up, by the time my order gets there, I get filled. And I'll get filled for the 307 or 308 or even maybe the 305 or 304, whichever is the better price for me. So a limit order is only a limit. It says the most you're going to pay for it or the market, whichever is better for you. And the same holds true, obviously, the opposite for when you sell it. Sell it for a limit order. So immediately put out, buy it, and you're going to get it. Let's say you got it for 306. Then you multiply the 306 by 106 if you're looking for 6%. So 306 times 106, you get my fingers are all thumbs here. So 324.36. So I'd immediately put up for sale for 325. So if I bought it for 306, I'll put up for sale for 325. It'll give me a 6%, a little more than 6% gain. Give a point back to the broker for his commissions. I still walk away with 5%. That's a pretty good trade. And usually you'll find that happens very quickly. like within a few minutes. Now, if the stock is going against me at that opening bell, okay, if I've let's say in this case here, because this is puts and the market opens and it's going to the upside, right? Well, wait until it comes back. You'll see the 1 minute candle turning red. Well, that's when you want to get in, right? When it starts turning red, now you're going to get it for a little bit of a discounted price, and that's how easy it is. There's nothing to it. Don't make it any more complicated than it is. It's not that complicated, truly. It isn't. So, but anyway, thank you and welcome for the pick of the day, and so we're going to be talking about here. So, all right, do you provide daily results of your trade recommendations on SPY? Yes, Raymond, we do. It's in the inner circle update. You'll get all that information in there. Okay, Jackson's asking here, if I have $1,700 in my trading account, can I trade with that, or do I have to wait until I have at least 5K? Okay, so if I have $1,700 in my trading account, here's what I would do. I would jump in and whether it's the pick of the day, excuse me, or the trading room, I would get in and I would learn everything that I need to learn. Okay, I would do paper trades. Meanwhile, I would start adding more to my balance. I'd want to add more to my balance. I would probably want at least I would say at least $3,000 or $4,000 in my trading account before I would start trading. So I would trade paper trades if I have a small account. Just keep accumulating your trading balance, and then once you're ready to go, start small paper trade, and then once you have about 20 or 30, or Aaron says 100 good paper trades under your belt, then transition to real money, starting slow with a small balance, like say maybe $1,000 or something. Okay, one thing you don't want to do is be too stressed out by having your whole account in a trade. That's going to provide a lot of stress, because now you're going to feel like, oh, this trade has to work or else, right? I blow up my account, and you don't want to be in that spot. So, all right, you seem to be still covered in mud and dirt from your illustrious career in the trenches. LOL. Thanks for that, Doug. By rights, I shouldn't be anywhere near a trading platform from what I went through in my trading career. I had made a lot of money over the years. I also lost a lot of money. And you know what, guys and gals, if you guys want to stick around for a little longer than just an hour, I'd be very happy to stick around here. It's kind of a nice, quiet night here. I just want to tell you a couple stories, So many years ago, I was dating a lady whose brother actually put me on options. He told me about some company is going down, some steel company, and she's explaining it to me. And I said, Dave, so let me get this straight. I sell options first, then I buy them back with these things you call puts. Yeah. I said, Dave, what are you smoking? Can I have some? I'm just joking about that. But I said, no, really. So I followed his lead. And I don't remember how much I put into it, but I made some money. So, wow, it's actually pretty good. I actually made some pretty good money. And then he told me about Exxon. And I said, okay, so let's go back a little bit. So I knew every year that Hershey goes up every year between February the 6th for a couple of weeks. Something to do with bonuses or whatever options they give to their management or whatever. But this behavior of Hershey went on for the longest time. I don't think it happens anymore. I know the last several years it was not performing. So I don't do that. I haven't done that in a long time. But anyway, I made some pretty good money. I think I put about, I want to say $5,000-$6,000 in a Hershey, and I doubled my money, more than doubled my money in 1 week. I was very excited about it. And then Dave told me about Exxon Oil. And he's very, very tight with Exxon. He says, oh yeah, something about earnings coming up in, I don't know, 3-4 weeks or something. They're undervalued or something. So I bought these really cheap options. I bought a whole whack of them for 20 cents and then some more for 24 cents. I was into that for, I think it was about $12,000, $10,000 or $12,000. And then I wrote it up and I cashed out when I had a little over $250,000. And I cashed out. Now, Dave did a similar trade, but he didn't cash out. He actually took it up to, I think, about 280 or something. And then he cashed out. Actually, he didn't cash out. I told him to cash out. We fought about it. I said, Dave, what are you waiting for? I see now, and I didn't, believe me, I didn't know a lot about this stuff then. I was still green, but I saw that it was wavering. And I knew that these things are going to expire soon. I said, Dave, take the money now. This thing could collapse. We don't have a lot of time here. And again, me, a neophyte, all right, a novice, telling him this. Oh, it's going higher. It's going higher. Anyway, it started to come, and then started to come down, down, down real fast. It lost theta value and volatility, whatever. Anyway, he did cash out. He still made about 15,000, which was probably about double his investment, but he could have made an awful lot more had he just not been greedy and just take your 280 profit or whatever you had, or like 270, 80, whatever it was, but he never did. So unfortunately, Dave, I visited him a couple times in the hospital he was in there for a depression or something. We never talked about it since, but I took my money and I just gave 20,000 to my lady friend there because of her, her brother told me. So it was just a bit of a nice little commission. So she blew all that. I bought an airplane, I renovated my house and traded a lot. I just continued trading. I thought I was Mr. Big Shot right here. Yeah, I know how to trade. I make all kinds of money. Well, that went down pretty fast. But anyway, I had a blast. So okay, all right. Let's get back into this here. How do we manage open trades after 10:30? Good question. I try not to be in any open trades after 10:30. Sometimes I am. So sometimes I might be watching it, and that's what I suggest you watch it too. Unless it's you've got a get till canceled order on it or something, you don't want to watch it, but you're pretty confident. Usually by 10:30, like we have a pretty good idea the markets are going to go, and it usually works. Like it just, we want to get in there, make our money quickly, in and out, and done for the day. So I discovered that by day trading stocks options on SPY in this little window between 9:30 and 10:30, that I can actually make all the money that I want and that I need, and that I can get on and do other things during the rest of the day, things that I also enjoy doing. Don't get me wrong, I love trading options, but I don't want this to consume me, if you know what I'm saying, right? So just kind of watch it. But most of our trades are going to finish up well before the 10:30 closing price there. How do we get a copy of the challenge? Well, you have to be in the trading room to do the challenge, and anybody in the trading room, you can get a copy of the spreadsheet. We can send that to you. So, all right, here we go. All right, so Clyde. All right. Thank you very much, Paul. I am just writing the first 5 names. Thank you very much. Okay, let's see. Clyde, Paul, is that K? Rob W. And Herb. Okay. You guys and gals are going to be sent after the session a copy of my Triumphs and Tragedies, because there is the turkey right there. Okay, one more. All right. You guys are awesome. Ed, Louis. Okay, everybody's chiming in on the turkey. All right, everybody else, you're late. Sorry. Well, maybe we'll do it again next week here. All right, Jack, if I trade a cash account, close a trade, are those funds available to trade again immediately? Okay, good question. If I trade a cash account and close a trade, are those funds available to trade again immediately? The answer is no. You have to wait until those funds settle, which is the next day. Okay. Goes to the bank, whatever, comes back, settled. Okay, now you can trade. So let's say you've got $5,000. You trade $5,000. You made $500. You can trade the $5,500 the next day. When you're done with your cash account, that's it for the day. Okay, so that's actually really cool. All right, I like this. Best way not to lose money: don't take losing trades. I don't think anybody sets out to lose trades. Ella, okay, yes, you got the okay. A lot of people with the turkeys. Do you wait for the candle to close on the pick of the day, or jump in if you see the red or green once it's going in the direction of the pick? Okay, so I don't wait for the closing candle. when I see the pressure, and you'll see the pressure fairly soon off, this is for the pick of the day, you'll see that pressure fairly soon, at the market open. Like you'll see it pushing up. If it's going to call it, you'll see it pushing down. So if it's puts and it's pushing down, jump in. If it's calls and it's pushing up, jump in. All right. Oftentimes you'll see a green candle and then it'll reverse. Don't worry about it. All right. So if you got into the green candle that reverses, you're gonna just don't worry about it. Markets go up and down. They go down, they go up. There's a lot of noise, especially on the 1 minute chart. Okay. All right. With the pick of the day, do you send an email, read the times when the trade goes against the plan? No, we do not sit in front of our computers all day tracking this. With the pick of the day, I put my trade in, I put in a good till cancel order in for the sell price, and then I go about my day and do other things. The pick of the day is never going to be the same day expiration. It's always going to have time with it. So you should be good. In fact, you should even be good, even if you have to hold it overnight. So we're very careful about finding that pick that makes sure that you do have time. Okay. So, and look at, I know some of you want to save money, so you want to get the cheap options. So you'll find something that's going to expire today. Don't get fooled into that. All right. Even if you expect the stock to, fill on the close, in 5 minutes or 10 minutes, you still need to buy the time, because nobody knows for fact, for sure, that you would stake your life on that you're going to get filled. There's a risk with everything. But if you have to hold overnight, wouldn't it be nice to have an option with a theta loss of maybe 3 or 4 or 5% rather than 100%? Because if you're going to buy an option that's going to expire today and it turns against you and it doesn't come back up, you lost all that money. And that's going to be very stressful. So, and even though it costs less. Now, here's the thing. A lot of people think, oh, it costs less, I'm going to buy it now. Look, if you spend, say, $3 or $3.25 or something for an option, you're going to get it all back when you sell anyway, right? So let's say you have $4,000 you have to trade with, and you buy, I don't know, 10 contracts for $3.50. It's not like you're going to lose them. You're going to get the money back. And let's say you sell it for a 6% profit. What I say, 325 or something, 9 times 106. You're going to sell it for 345, right? So you get it back. You just buy fewer contracts than you would if you have cheap options. Options are cheap for a reason, because they're of higher risk. Okay, they're a higher risk. All right, how do I set an automatic close as an exit? Well, again, so right away, let's say you own the option, and then you just, like I know Thinkorswim, you click on the option, you right click, and it says create an opposite order. So you put it in for a sell. So let's say you have 10 contracts that you own, you want to sell those 10 contracts, and where it says the price, you adjust the price, add in your 6% gain, and then you should be fine. Use a GTC order. That means that if it does not sell today, it'll sell tomorrow. It's up on the market until it either sells or it expires. Okay, that's why I always use GTC orders, good till canceled. Don't use just a day order on these, because if you forget about it and it drops off the market at the end of the day, it hasn't sold, and it's sitting on your computer, you don't put it up for sale, it's not going to see it on your computer. You're not going to be able to sell it, right? You have to have it on the market, right? All right, question here, Lafayette. How do I get around the day trade pattern, day trade rule? Simple. Use a cash account, and you can trade as much as you want as long as you have the cash in your cash account. Now, word of warning. Brokers don't like to give cash accounts because they make their money by lending you money on margin. So you may have to argue with them, say, listen, I just want a cash account. Maybe later at some point I'll convert it to margin. Right now, I want them. And if they don't want to give it to you, say, hey, no problem, I'll go somewhere else. They'll say, okay, hold on, I'll give you the cash account. And then they'll grind their teeth and whatever. They'll be all mad, but don't worry about it. They'll give you a cash account. They should. And if they don't, go somewhere else. We like to advocate Tasty Trade. They'll give you a cash account. Thinkorswim, they should give you a cash account. So one of the things to look for in a broker also is make sure your order is sent directly to the market. All right. There's some brokers out there that sometimes they might intercept your orders to the trade desk for review. If you ever run into a broker like that, run for the hills. Don't walk, run for the hills. You do not want a broker that will intercept your trades to the trade desk for review. All right. What that means is they can actually front run your order. They take the profit, leave you holding the bag. Not a good idea. You want your orders right to the market. Tasty Trade sends it directly to the market. So does Thinkorswim. All right. Let's see. Tell me a story when you're making your own ripple in your backyard. My father was a winemaker. All right, I see the trigger, Howard. Okay, did I see it? I see the trigger. A lot of people see that. Okay, all right. Question here for the 2 to 10K. What is the percentage of the profit target? Okay, so as it turns out, I think I'm pushing for 2.5%, but that's not the way it was originally designed. What I figured out was how much do I need every day to get to my target over 3 months. And this is kind of where this goes. If you put this on a spreadsheet like I did, again, you guys okay to go longer tonight? I'm on a roll. What can I say? I'm on a roll. Let me know. All right, let me know. So question here about a percentage of so I never set out to put a percentage on the 2 to 10K, but what I did was I have 3 months with which I need to take 2,000, turn it into $8,000. Now, it's not that difficult to make 2.5% or 3% per trade if you do one a day. So that's kind of so I just punched up these numbers that would basically I think I started with 5% and then I just pulled it back. I can't remember now how, but I stretched it out so that I will hit my 10,000 target in 3 months. It's like the old question, how to eat an elephant? Well, one bite at a time. Or what's the other one? How do I walk around the world? Well, one step at a time. And that's the way it is with this. So if you put this on a spreadsheet, you got your beginning date and your end date, you spread it out, you got yourself a nice berth in which to work with. And all you have to do is just look at your setups, make sure the setups are there, make sure if there's any chart patterns that they're clear, check your fundamentals, make sure you have enough room to grow into, check those support and resistance levels. We do it all in the trading room. We talk about it. Some of these trades, they come up very fast and they'll come up right near the beginning of the day. All right. That's usually the first trade we do. Okay. I see the market moving up. I'm taking advantage of this, guys. I'm buying in this and I see how much money I have to work with. I divide that by how much the options cost. So I might have, say, 16 contracts I can buy. I buy them. And then I see, well, how much am I supposed to make today? Well, I'm supposed to make $110 today. I divide the $110 by the 16 contracts. That means each contract has to make about 7 cents. I add another cent for the brokerage, the commission. So 7, 8 cents. Anything over 8 cents is a bonus. And when the market moves fast, it's nothing to make 10, 15 cents on a trade. So this is how you work it up. Well, I expect that we're going to be coming into our $10,000 profit a lot sooner than December the 25th. So, all right. Okay. So a question here. Hugh, I started trading on a cash account last Monday, and it seems the fund comes back to my account right away when I sell. And can I use it? Is this new Thinkorswim thing? As far as I know, yes, okay. So good question. She sees that she bought it and that she sold it, and of course it gets credited to her account. That is true, but you cannot use it yet. Don't use it yet, okay? Because it still has to go to the clearinghouse and then come back as a settled trade. Now, you might want to try to use it and see if you get a good faith violation. All right, so good faith violation is a little thing. Let's look at a little speeding ticket. They slap you on the, okay, you got a little speeding ticket here, except they don't really do anything. But I believe, like I know with Tastyworks, you're allowed, I think it's 3 good faith violations in a 12-month rolling period. Okay, if you get a 4th, they're going to suspend your account for 3 months. That's the absolute worst thing that a trader could could encounter, where the broker freezes your account because now you're like going to jail for 3 months. You're handcuffed. You can't do anything. Oh my gosh, what am I going to do? Right? So if that happens to you, you can simply open another account, even with the same brokerage, and then move the funds over from your suspended account into your new account, start trading, and you can do that the same day. You might think that sounds a little like I'm skirting the law here, but actually the broker told me to do that. Okay. So I got that right from the broker's mouth. So that's pretty cool. All right, another question here. So if you get a good faith violation, I think you still have 2 more before you can't. So if you get a good faith violation, then you know that, okay, that's right, I can't trade those options until they do settle. So then just run with that, the rule on that one. So how did you settle on the 6% as your target gain? We did a lot of research. We found that that's a good balance between risk and reward. You can probably get 6%, but you do stand the risk. So, okay, so the higher the target on these things, the less likely you're going to get filled, right? So I mean, 2.5%, 3%, it's kind of like a no-brainer. But going higher, 5-6%, might be a little bit of chance from time to time. Usually it isn't too bad. Anything higher than that, often you'll get filled, but not always. And so we just found that to be a good balance. So looking for the coming week. Keep going. You don't need to sleep till 4 a.m. Yeah, okay. First time hearing of you and watching a webinar. I like your style, very personal and clear, honest info. Thanks for that, Paul. I love these comments. Give it a try. Okay, I got some more questions. Take another few more questions here. All right, my challenge is consistency. I enter a position with the same setup as before when I was successful, but it doesn't work out the same way. What am I doing wrong? Okay, so the question is, person kind of sees the same setup they saw maybe yesterday or the day before, and maybe the day before, yesterday, they made money, and now they're not making money. What's going on? Well, options are like it's like a living thing. It's a living being, and it has a personality all of its own. Okay, so if you it's like your kids, right? You can have 3 kids, and each of them's got its own personality and traits, and you can you can like your like in our family, Grace is our favorite. The other 2 boys, we don't care about them, but our daughter, she's our favorite. But so anyway, we have fun with that. But so everybody's got a different personality, and that's the way it is with options. And you might say your personality is, well, this guy's outgoing and she's more kind, or he's more athletic and she's more of a homebody. So everybody's got these. So with options, those personality traits are things like your theta loss, your delta, and your volatility, and other things. But these are the things that we focus in on. So, and there's also news. News drives the market. So even though the stock might be the same spot and the setup might be the same, that doesn't mean you're going to get the same results from your options. One day you could be shooting for the moon. The next day it's kind of hovering around. Well, not really sure. Maybe the third day, it doesn't matter if the market's going up, your option's going down, right? So, I mean, there's all these different factors that get into it. So, all right, another question here. What is the advantage of trading SPY versus, say, the Qs or SPX? Okay, I get this every now and then. There's enough money to be made on SPY. You don't need anything else. That's kind of the short answer to that. SPX, if SPY is the stock that follows the top 500 stocks, the SPX would be the basket of the top 500 stocks. So your options are going to be more expensive on SPX. Excuse me, a single option could cost you $2,000, $3,000, $4,000, $5,000. So SPY has a lot more flexibility, more affordability, more volume. SPY is also trading under the American system, which is it could be exercised at any time up till expiration, versus SPX, which is the European system, which means it can only be exercised at expiration. Anyway, don't worry about all that. but just say, we like to trade SPY. Okay. And that versus say the Qs. Well, the Qs, now the Qs is a little unique because it falls mostly with the tech stocks. So let's say you have a situation with Google or Apple or something, and Apple or Google or whatever, it goes down a lot. It could bring out the whole sector to the downside because they are so highly weighted. All right, those are like the numbers 1 and 2 stocks in the Qs. So, and as they are in the SPX, SPY, but they're not as heavily weighted with SPY as they are under the Qs. So you could be in, Apple could have a bad day and the whole sector comes crashing down. So you don't want to do that. Another quick question here. Do I need to know both your system and Aaron's to make money at this? Actually, so no. Aaron's got his set of indicators that he uses. I have my set of indicators, and they're both very good. I've been doing this for many years. Aaron's been doing it for many years, but here's the key. If both Aaron and I agree on a direction, then it's probably a good idea if you went in that direction and took advantage of this. So you can actually do one or the other. So, but if you know both, you'll know you'll get that synergy in there, and it'll work even better. Another quick question: if I sign up to the trading room or the inner circle, do I get any one-on-one coaching? No, that is actually another service we provide. I think it's $185 an hour they charge for that. So. But chances are in the trading room, I mean, that's really where we teach this stuff anyway. So hold off on the one-on-one coaching, see what you can do in the trading room. And then if you really want one-on-one coaching, we can address that as well. We're trying not to take your money. Who has better trades, you or Aaron? We both have great trades, and look forward to, all of your trades on that. Listen, I'm going to move forward with this webinar here. Pick of the day. It's okay. We talked about the pick of the day. It's got 96% plus success rate, mostly the same day turnaround. It's emailed to you at 9 o'clock or shortly after. Buy at the opening bell. We talked a lot about this. If it's going against you, wait for the reversal on the 1 minute. Immediately put it up for sale. Good till cancel order for 6% gain. If it drops 50% after the second day, consider a repair or sell it. We talked about that in the trading room. Got a real special price on this, folks. If you didn't get the email, you might want to contact customer service at DayTradeSPY. Get this $3.99 a quarter. Honestly, you're not going to go wrong. You should not go wrong with this. If it's actually a no-brainer. It's a no-brainer. I sure wish I had this when I was learning this stuff. These stats, by the way, when you say that 96%, we're talking here about conservative numbers. Chances are you're going to buy them for less money. You're probably going to have a better success rate than that 96 that we see over here. Okay. $3.99 a quarter. All right. Pick of the day. This is great for those people not willing or not able to watch markets all day. If you're looking for a fairly reliable morning trade, if you don't want to do the heavy lifting, we do it for you. Fairly stable, quick turnaround. If you're satisfied with say 5-6%, this is the place to be. Again, let us do the heavy lifting. We analyze the market for you, so you don't have to give it, we deliver our option of interest to you. You just have to trade it. And I get this asked a few times every couple months, if not more. Somebody says, Hugh, how about if I just give you my account? We'll split it. The answer is no, I can't. Not licensed. Don't want to get into that. Just subscribe for this ridiculous low price, $3.99 a quarter, and enjoy the profits, folks. All right. So with all that, I think any other questions? Kind of beating this horse to death. All right. So what I'm going to do here, let me see if there's any other quick questions I can answer here. Do you still sign autographs? Okay, Doug. Yeah, sure. You guys are pretty funny. I love you all, folks. I love you. Yes, I do. All right. And I think with that, thanks for joining us, folks. We're going to call it a night. Again, those people who are new on, never heard of options, just stay here. And we're going to spend a few minutes going over like an options primer. All right. So we'll see you the next time. Thanks so much, folks. It's been a pleasure.
I can tell you what I'm seeing. You can have it if you dream it. Just be brave and you'll achieve it all. It all. I wanna know if you really want
All right, here comes the second segment of this little session here that we're going to be talking about. And that is what are options? Options are actually contracts. This is a bit of an options primer. For those who don't know anything about options, right? So this here is options are actually contracts that gives the options holder the right but not the obligation to trade the underlying stock for a certain price by a certain date. All you have to know is two names. If you expect the stock to go up, you buy a call option. If you expect the stock to drop, you buy a put option. You don't sell anything, you buy them. Strike price, the set price at which the stock can be bought or sold for, okay, when it is exercised. And then there's the expiration date, the end date at which the contract expires. Pros and cons. Pros: flexibility, cost efficient, huge leverage, high return potential, many strategies available, even though we only use a small handful because we find that we can make a lot of money using those. We don't have to know everything about everything. For the same reason, I do not need to know how an internal combustion engine works to be able to drive my car. You do not have to know everything about the stock market or the many strategies to make money. I love options because it's fun, exciting trading, and of course, profitable. There are some cons to this thing, okay? Don't kid yourself. There's this thing called the time decay. It's like buying an ice cube. It melts on you as time goes by. So you want to get, and by the way, it melts faster the closer it gets to expiration. Come that last day of expiration, that baby melts on you real fast. So you want to make sure that you take that into consideration. Options have commissions, just like everything else, and they have an element of risk. Absolutely, they do. I'm not gonna lie about it. There is risk to these things. If the stock turns against you, you're stuck holding the bag. You could be in a losing position. All we do, folks, we just trade SPY options, day trade SPY options. That's it. Nothing. SPY, highest traded stock, affordable, liquid, exciting trading, and high profit potential. That's all I need to know. Another reason I got into SPY is because most people lose their money trading options. To me, that's very exciting because, hey, if people are going to lose their money, they might as well lose it to me, right? And that's what they're going to do with you once you understand and demystify options. And that's what we do. We take the mystery out of options so that you will understand what they're all about, how to trade them. And therefore, you're going to make the money that others are going to lose. Is that appealing? Okay. Oh man, when I heard that, yes, that's where I want to be. Okay. All right. Does your pick of the day still include an hour ride in your plane? No. One stock, one strategy, 1 hour a day. Over the years, figured out what works, what doesn't work, both trading and training. All right. So now, options follows the top 500 US stocks. This is what SPY does. Efficient use of analysis time. Again, you don't have to be in front of the computer for hours and hours. I'll tell you what I do. I get up around 8:30, get in front of my computer, and I can determine pretty quickly which way the market's going to go today. I look at the fundamentals. I look at the news, what happened overnight, right? What happened last little while, what's coming up, and I can tell which way the market's probably going to go. Okay. Now, most major news items are in the morning. So sometimes you have to wait a little bit, maybe 9:45, 10 o'clock. But usually with the technical indicators, what I see, the chart patterns and where the market's gone, got a pretty good idea. And that's how we can make use of our efficient analysis time. We don't have to know everything again about all the thousands of stocks and sectors and ETFs and who knows what else out there, futures, commodities, Forex, crypto. What's this other one's non-fungible assets or something, or I don't know. Anyway, quick moves. These are quick. I like to get in, get out, make my money, earn my gains faster. Fairly reliable, consistent, predictive, even forgiving. Note the disclaimer on that, folks. Nothing is for sure. Nothing's over 100%. But from a standpoint of reliability, you can actually pretty much bank on SPY to give you your gains, or you'll understand quickly if something goes south on you and what to do with it. That experience comes, and once you have that, you're going to have that experience, gut feeling, whatever you want to call it, and you'll be able to identify whether it's a good day to trade or not. Prices can be anticipated in any market, up or down. That's what I like about SPY too. I can make money going down just as much as going up. That's pretty cool. Why not SPY? Well, learn something new. Stay mentally sharp. Folks, if you're a trader and you understand the stuff, you stay mentally sharp, I think that kind of keeps you young, right? Earn while you learn. Time passes anyway. Might as well make money along the way. Huge profit potential for serious traders, and you can actually achieve that dream lifestyle that you long for. I know I have, and I guess if there's any regrets in this, it's that I didn't learn this sooner. But that's the price you pay for learning, right? It's a learning curve. Exciting, thrilling to beat the market. Let's face it, it's something exciting about that. Hey, I beat the market today, you know? It's a sexy thing, I guess. I don't know what it is. Maybe ego, who knows what. But here's what I really like about this. You can actually pass your knowledge on to your kids. Now, my kids know how to trade because I want to make sure they know that, look at, you could be with a company, you could be, you're an engineer, you could be with a company, but one thing you never know, there's no assurance that you're going to be with that company. It's not like the old days where you started with a company, you're there for life. You guys know that. Right? They just have to find somebody who can do it cheaper, faster, smarter, more efficient, whatever, and you're gone. Especially if you get into a company with a lot of young people in it, right? When you're like, your 50s or 60s or something, or 70s, there's a lot of companies that are run by younger people, and they want that culture, the young culture. So they say, oh, we just took over this company, and we're just going to try a different direction. We're going to give you a payout. Off you go. Anyway, I want to make sure my kids knew how to trade so that no matter what, no matter where they are, they know how to access the market. Now, see this here? It used to be brown, used to be a lot of it. Then my daughter, after graduating from college, said, listen, Dad, I want to go teach English as a second language over in Thailand. Thailand, oh my gosh. You guys remember that song, One Night in Bangkok? YouTube it, listen to it. Anyway, I'm getting all these horrible thoughts of my daughter going to Bangkok. Oh no, tell me you're not serious. You can't forbid them to go. They're old enough. They can make these decisions. Anyway, I didn't believe it until I'm driving to the airport, right? Here's my ticket, Dad. I'm really going. Well, she loved it. She loved it. She loved it. She made a lot of great friends there, but they don't pay that well. And she liked to tour around and see, other sites and countries and things, Myanmar. Oh my gosh. Punch up Google, the worst country in the world. There's Myanmar, one or two at the top. Oh man, are you kidding me? Beautiful country, apparently. She sent me pictures and stuff, but I said, you have enough money, Lex? She says, yeah. Whenever I need money, I just go to SPY on the stock market and I get it. The American dollar goes really far over here, and I can get my money through whatever exchange, whatever, and off she goes. I mean, that's very comforting for me. So she came back after a year, very happy. And then a few months later, she said, oh, I'm going down to Peru to do it all over again. Peru now. Oh, here we go. And here I'm thinking thoughts of, Escobar and all the drug lords. Why do you go to these places? And I said, do you have enough money to carry this? Oh, yeah. I just go to SPY and make some money down there. Anyway, so when she first came back, my hair turned white. And then when she came back the second time from Peru, see that? I lost a lot of it. So this how you age. It's your kids that age you. So, all right. But passing on that knowledge on to your kids, yes, it's very it's liberating for me. I know that I actually felt very good about it. So what's this option potential, stock option potential? Okay, so let's say you want to control 100 shares of SPY. It'll cost you $440 a share. That's $44,000. Versus if you buy one contract, it costs you $3 because it's 100 shares. It's actually going to cost you $300. Okay, $300. Now, if the stock rises $1, the stock goes up $1, and then you've got $44,100. Now, there's this thing called the delta, which is the relationship between the option vis-a-vis the stock. If the delta is a 50, that means that if the stock rises $1, your option goes up 50 cents. So guess what? Your stock is now worth $44,100, but your option is worth $350. So what would you rather have, the 0.23% on the stock or the 17% on the option? I think it's a no-brainer. And once discovering this power of options, I never traded anything, didn't trade stocks again. I never traded stocks again. I've not bought a stock since I can remember. Folks, and this is what it's all about, all right? Learn from our mistakes, one stock, one strategy, 1 hour a day. Learn from our mistakes because you're not going to live long enough to make them all yourself, all right? And again, folks, thanks for joining us. If you want what I have, you got to do what I do. Been a pleasure. Hope to see you online.